Let's begin
Yeah.
by talking about how things have been for you all since listing, all the way back in 2018. Of course, there are a lot of much more processes in place as a listed company, but tell us about the big milestones or the big developments that have happened since.
I think since listing, obviously, it has been a more investor-centric approach. For sure, there are a lot of compliances that come with being a publicly listed company. So that has been kind of good for us to, that helps any institution, I believe, to work more efficiently. But in that sense, I think the operations, etc., hasn't changed much. We're still on the same path to kind of follow the vision that we had set out to achieve. So apart from that, I think it's just the difference majorly has been the feedback we get from investors and the direct connect that we've set up with investors through the earnings calls and through the presentations we've put out. So I think that's kind of made us part of this ecosystem. Other than that, when you think about it from the inside of the company, it's been the same. Everybody's working
Hmm.
towards the same vision, and we're hoping that we continue to work towards that goal.
Obviously, your accountability, your answerability to the investors
Yeah,
significantly goes up as a listed company. So, from an investor standpoint, if you want to give us the big milestones or the big highlights, how you've grown in the last 5 to 6 odd years, tell us,
I th-
about the
yeah.
trajectory that you've shown.
I think from 2018, what we've majorly grown on is kind of the business model has become more of an export-centric model, which is what we set out to do, let's say 10 years ago when we were shifting from the institutional business. And specifically, we've gone and started going towards more of these regulated markets and more farm-emerging markets compared to the current market where we were. A
Hmm.
big kind of impact that you'll see has been the growth of the oral thin film business and the NIP business. So these two are kind of the major chunks of what we do, and these are what are the result of our vision and our mission and the technology that we've developed. That is what's come out of this. So the NIP have been something that we started out, let's say around 2018, 2019, when Dr. Chandrasekhar Mende joined the company.
Hmm.
Dr. Chandrasekhar Mende is the technical director, and he has had a experienced background working with these technologies, working with regulated markets. So when he came in, that is when we started kind of accelerating the development for the NIP. And it's a long process in pharma to develop any product. So
Hmm.
that what we started, let's say around 2018, 2019, is now coming to fruition. We've started filing these NIP in the European markets, which is what our goal was. For the
Hmm.
oral thin film business, you'll see in the recent presentations, there's a decent chunk of revenue coming in and contributing to the overall revenue of the company. So I think
Hmm.
in the terms of big milestones, this is what's been happening. There have been major improvements on the plant end. We've
Hmm.
spent a lot in terms of capex, and we've made the plant kind of upgraded the plant and machinery to be able to cater to the European markets. So in these 5 years, I think less COVID. COVID was obviously a big shock for everyone. But I think luckily, us being in the essential services industry, we didn't take that much of a hit. But there was definitely supply chain disruption. So less COVID. I think the uh, progress has been good for us, and the market has been kind. And I think we've seen this kind of demand coming for the product. So that's a good sign always. And going
Hmm.
forward, this NIP and OTF is a big kind of story for us, and hopefully this is what we'll be able to soon translate into numbers as well, even
Yeah,
better than what
I
we are
have. I
having
did
now.
see that in your investor presentations that
Yeah,
the NIP/OTF contribution has been rising in line with your vision.
yeah.
But how much more is it likely to further increase? And if you could give us some color on how that impacts your, or how that could potentially impact your numbers?
Yeah, yeah. So I think this NIP. So I'll just briefly explain what these NIP are and what oral thin films is. So NIP is a term we coined internally to kind of have this labeling of these bunch of products called new innovative products.
Hmm.
Zim as a company specializes in, where our vision has been, the MD's vision has been to give patient convenience and treatment adherence with the kind of solutions that we are doing. So convenience is a big thing because a lot of people won't take medicines until it is convenient for them or won't stick to the treatment. And
Hmm.
adherence is obviously very important when you're taking medicines for a long-term condition. Adherence cost is huge when it comes to the medicine market. And for both of these, the vision, the core is this. And from that, what we've tried to do and the way we do it is through these innovative technologies and delivery solutions, drug delivery solutions specifically. So
Hmm.
oral thin films in itself is kind of speaks for itself when you see that there's a dosage form that's easy to take, that doesn't require water, that's going to help people who have difficulty swallowing pills. And with these NIP, what we have done is, so there are a lot of new molecules that keep coming up. These molecules usually come from the West, where American or European companies synthesize or are the innovators of these molecules. But in the time these are in under patent, or in the time that they are not yet become generics, there's a lot
Hmm.
of demand for them still because they're targeting a newer condition. When they become generics, there is a lot of people who require these and require these fast. What we have aimed is with these new innovative products is to make these kind of products accessible. And why that is difficult is because some of these molecules are very complex and require technologies to develop that are not easy to do. Some are also products which are under patent, so you can't use the same formulation process. So I think from that standpoint, the NIP OTF are something that we are looking to grow in the business, but we do understand that there is a caveat that these products are yet to come towards the eastern side or the ROW markets. So I don't think there'll be immediately a lot of growth in the mix. There will be a growth. We're looking to grow it further and further. But whatever growth comes, it's going to be high value for us because these are products that are unique. And we do have our business, that is the legacy business that is going on, which is going to cater to the rest of the world markets. So there is going to be that business going on as the NIP starts coming in, and as the market, from the west, the trend starts coming in, and these molecules are required in the ROW markets as well. We'll start supplying them, and we've seen a big chunk of revenue. So the revenue that you see right now from NIP is not from the European markets; it's from these pharmaging and ROW markets. So there's already a shift that's coming. So hopefully going forward, today we are at 10% of the revenue contribution. We're looking to grow this year on year, but an exact percentage is difficult to quantify because a lot of factors will come into play. But I think this is what we are wanting to do. So you will see an increase in the percentage for sure.
You know, earlier you were also talking about how there's been a shift towards more regulated markets. How's
Yeah,
that been for you, in terms of course, the big challenges and the big opportunities?
I think the opportunity definitely is the fact that these products will give you more value in these regulated markets because the market is poised that way. Um, for the challenges part, I'll say that the challenges are definitely on the regulatory front, and the fact that a lot of these approvals are not in your control once you submit it to the ministry. A lot of it is not directly in your control. You've done your part and you have to wait and watch. It's the waiting game. So I think challenging has been adopting to this kind of setup where the European setup or any regulated market setup requires a very uh, pristine plant and system of operations. So initial adaptation was obviously not that easy. It's a different shift for us, but I think as time goes by, we're learning to adapt to it. So for us, I think the biggest challenge is still going to be the regulatory part where it's not in your control. So that's why whenever investors do ask us numbers, we're very careful to put a number to it because it's not sure until you get the regulatory approval and you
Mm.
have the authorization in your hand.
How many approvals are pending at the moment in your key markets?
So for the NIP, we've filed four uh, already. This up till date, I think we filed four. These are in the European markets. For the oral thin films, we've gotten uh, two products approved. The European markets. These are already commercialized. One of them being sildenafil citrate, which is a big product for us, and the other one being rizatriptan. So these are already there. About six, or let's say 6 to 8 approvals we have combining oral thin films and NIP. And this is just for the European market. There are some
Mm.
that are in Canada. We have a partner in Canada that's doing an antiemetic product. We have a partner in Brazil that's doing an antiemetic product. So about 8 to 10 products we are playing with right now, and those seem to have registrations coming through.
So once these are also in place, let's say hypothetically, what's
Yeah,
the kind of
yeah.
value unlocking or overall growth that you foresee for yourself?
I think out of these products, when the approvals come, we're definitely hoping that uh, the way it happens in any business, I think 1 or 2 products are going to be the superstars. They're going to hit off. And for us, I think the indication right now is the market size. So when you look at the urology NIT product, that has a market size of about $1 billion ex US and
Mm.
Japan. So we are looking at that market. Now, for us, obviously, this is the $1 billion is the sale price. For us, it's 1/6, let's say, or 1/7 of the market because we are selling it to our partners. So about this 200, $300 million market, even if we are able to tap 10% of it, we'll be really
Mm.
happy because that's a big number. And we are hoping that once these registrations come in, there are a lot of big partners that are interested in this. So I think 1 or 2 partners will be able to help us reach that scale.
Are you planning to directly also enter any of these bigger geographies?
I think not anytime soon because the marketing is a very capital intensive game, and especially doing it in countries which is not your home base, you need an office
Mm.
setup, you need a lot of capital. So I think for the foreseeable future, what we've understood is that these partners give us a faster way into the market and give us broader access that will take a lot of time for us to build up if we do so.
Mm.
So I think for the near future, we are looking to have partnerships, marketing partnerships, which are already starting to get in place. So I think we'll rely on our partners for now to get these products out to the patients.
Okay. So, Asia markets have been quite
Yeah.
resilient, from what I could tell from your published information. So, which areas within Asia are driving the expansion? And also, if you could tell us why there has been a moderation in the MENA business mix. Was that a
Yeah.
deliberate shift, or were other factors at play?
So for the Asia market, firstly, when we look at the Asia markets, the specific countries are some of the countries like Philippines, Indonesia, and these Southeast Asian countries, which have given us a good demand. These are already very big markets, but I think we have shifted our focus more because these markets are more formulation driven, and we have started to go towards the formulations business. So these markets have come up for us. When you look at the MENA markets, obviously there has been a currency issue that is not directly in our control. There have been issues of getting dollars from the distributors. So there has been a gradual decline due to that. But it also has been a conscious decision because we are realizing that it's not, some of these markets are not as stable as we'd like them to be. So that is why we are getting a shift towards these more stable markets, and the Southeast Asian markets seem to be those currently. So that has been a kind of a deliberate shift also in part, but in part it's also been because of the currency issue that happened, and the first quarter was a big hit for us because of that. So
Okay.
it's a mix of what we've done.
And given that you have a fair share, 75% of your business relying on exports,
Yeah.
which products, categories, or markets are you betting the most for driving your growth from here on?
I think it's going to be the formulation business. So currently the business is divided into the pre-formulations and the formulations. So the pre-formulations are basically products that are formulations minus one. Those go into different markets, and those are done because a lot of countries don't want direct formulations to be imported into their country. Obviously, they want to promote localization, so they want you to do the FF minus one formulations minus one
Hmm.
business. So the PFI business has been our mainstay till now. It has held a huge chunk of the revenue. Going forward, we've realized that this is a good business and it will grow. And if we see an opportunity, obviously we'll not say no to it. But there has been a conscious shift towards the formulation business. So from here on, you'll see a formulation business growth happening. This is going to be in the NIP and OTF. Both can go as formulations. So you'll see the NIP OTF contributing, and you'll see, I think, more of kind of, let's say, a leaner model towards focusing more on the kind of molecules and therapy areas that are going to give us returns in the longer run. So our mainstay is still the NIP and OTF is what we're hoping to grow as we go in the future, and this is how you'll see the mix turn to in the future.
But what about, I mean, what explains the sharp rise in Nutra revenue? And there's been a slightly, slow and steady dip in pharma in the last few
Yeah,
quarters. Is
yeah.
it a more sort of a bigger trend here that we're looking at?
No, I don't think so. The business is always going to be targeted towards being pharma centric.
Okay.
It's 80 to 85% of pharma is what we target, and we hope that that is how the mix will be. With Nutra, what has happened is last fiscal year was one of the better ones for us in terms of revenue. We went from 330 crores to 400 crores, and a major part of it was one or two of our distributor partners had requirements for certain Nutra products. They were looking at a COVID surge that had come up,
Hmm.
and they had some one-time orders that they put in, and we saw a big surge in Nutra. And obviously, that was a COVID wave that was going on, and the repeat orders were not as frequent. So we saw a dip in Nutra. But the rise again that has come now has been the India government business.
Yeah.
We have seen great response from the government business that's coming. So I think that's a good line to grow because it's a reliable business in the sense that it is not it's in the home country. So we are hoping that if this is a good business, we'll kind of grow it in the Nutra segment also.
Um, okay, that gives me some visibility.
Mhm.
But what about the margins? How good are the margins in the Nutra space? And perhaps if you could give us a similar picture for pharma as well.
I think gross margins have always been better for pharma,
Okay.
but on a more EBITDA level, let's say, or an operating margin level, we've not segregated the business on that aspect. It is still some of the products that are made in the same kind of building, in the same infrastructure. So it's difficult to have an operating margin level of division. But let's say the gross margins, obviously, the pharma business is more valuable for us. So it has slightly better gross margins.
Hmm.
But Nutra, depending on which market it goes, you see margin shift also happening. But in the India business, especially, the margins have been good. The gross margins have been good.
Okay. If I look at this year, it's also, so
Yeah,
far it's looking pretty good for Zim Labs. So tell us
yeah.
what have been the key drivers for margin recovery, and do you think once again you can cross that 15% threshold, perhaps by the end of Q4?
I think it has been a good year, but not as good as we'd liked it to be. It is still, I think we revenue wise, we might be short of last year. But when you look at the margin and why there has been margin recovery, it's owing to obviously the better business mix of an IPOTF coming in, but it's also a top line kind of impact. There's a certain top line you have to go above so that you can meet your expenses and you can have a break even in a sense. So I think as top line grows, you'll see margins go better. um, when an overall perspective we look at, I'm not sure if we'll match the margins of last year. It's early to say. Once we close the numbers for Q4, we'll have a better answer. But there has to be a certain top line threshold that we cross, and Beyond that, then you'll see more of these factors as business mix and some other stuff also coming in. So that'll hold a more significant impact on the margins. But currently, most of it is the top line. So in first quarter, like you saw, PAT was almost 2 million, I think. That
Hmm.
was because uh, as top line grows from there, then second quarter we improve. So I think if when we grow in top line, these margins will definitely improve.
How soon do you expect that to happen, like in a sustainable way where you can sustain your
Yeah.
margins, perhaps above the 15% threshold? Does the company or the management have any, targets or vision internally?
So I think with the European kind of registrations coming in, we've expecting the first few registrations to come in later in this half. So second half of let's say FY25 or first half of FY25 registrations will come in. And from H2 FY25, once we have registrations, 3 to 4 months after registration, we can see commercialization happening. So as the market shift happens towards the stable markets, I think we'll be more confident about this revenue growth happening quarter on quarter, and then we are less reliant on factors which are not in our control. So I think in a year or two, we will have this stability come back up where quarter wise we'll see margins growing and revenue
Okay.
growing. Let's say not margins maybe, but revenue growing.
Okay.
Yeah.
Let's talk about the investor returns as well, because last 1 year there's been an over 25% growth in your share price.
Yeah.
But
Yeah.
since listing, if we look at the price movement, it's still pretty subdued or rather negative territory. So,
Mm.
as a
Yeah.
message to your investors who have held on to the stock all of these 6 years odd, and who are perhaps now getting a bit jittery that they've not
Yeah.
really seen meaningful returns, what
Yes.
would you like to say, and what can they expect from Zim as an investor in the coming years?
I think for the company, and we've tried to make this clear to the investors as well, and try to be transparent with them on this, that when you see the how the market is going right now, such a bullish market, and what I've understood is that this stock and this company is going to be a long-term hold for sure. The volatility in the stock that you've seen has been because of some of the escrow transactions. One escrow transaction that we did, where we reached that peak of about 150 rupees per share. That was one of the volatile factors. But going forward, there's going to be a steady return share. We are wanting our investors to be in the long term for this. Investors who believe in the vision, because there are a lot of factors that are at play here. And I think one factor that from our side is kind of what we are banking on is the vision that we have. People who believe in the vision and people who understand what we are trying to do are going to be rewarded in the long run. But I would definitely say this is not one of those stocks that will kind of be the multi-bagger that uh, stocks in the market these days are, and the kind of returns we are seeing from PSU stocks. And this is a different kind of company. It's we're trying to have investors who are there for the long run, and there's a little bit of understanding of the pharma business that comes in because it's not as quick as some of the other industries that you see. So I'm hoping that when it comes to the earlier investors, people who have invested in 2018, 2019 are definitely going to be uh, in a good upside, I'm sure, because from that point, the stock has grown 3 times, I think. Then we did a bonus in the middle. That's why the price is now in the hundreds. So for them, definitely, it has been a good return, I'm sure. For people who are investing today, advise them to study the company and take a call for themselves because this is uh, I don't think anybody understands the market completely. So it has to be your call.
You just talked about the bonus shares, and just a
Yeah.
couple of years into listing, you had rewarded your investors. So, any such further developments or further plans that you have for your shareholders?
I think we'll definitely reward the shareholders when the time is right and when we know that the company has reached a place where we can. But I don't think anytime soon we have any plans to do so. If something comes up, then yes, uh, we'll be the first to tell the investors that yes, we are planning to do something. But I think as of now, uh, there are no plans.
How is the funding, or rather the cash situation, at the company level, and as and when you do expand into newer categories, newer markets, of course, you'll have to scale up your operations and your, manufacturing infrastructure.
Yeah,
So, how
yeah.
well placed are you in terms of funding?
I think it's a combination of borrowings and internal accruals. So we have some borrowings that we've taken up for this capex. There's also the internal generation that keeps happening. Last year was a good year for us. We had a PAT of about 24 to 40 million, so about 24 crore rupees. All this goes towards the funding, and as we go along, I think it's still going to be a mix of borrowings and internal accruals to kind of fund the capex and the expansion. We have already done quite a bit of it, about 70-80 crores of capex in the last 4.5 years. So we have been able to manage with internal accruals and borrowing. I think similar model is what we'll follow for the next 3 to 4 years.
Anything specially earmarked for this year, for in terms of capex?
No, I think it's the completion of the projects that we've been doing. A warehouse project has been a big one for us. There has been a small batch manufacturing unit and some specific NIP machinery and suites that we're doing. So I think we'll continue on those. Those projects are the ones that will give us good returns when they're completed. So nothing earmarked for a new project, especially. It's all that is being used up to complete the projects that have already been going on.
Okay, all right. Thank you so much, Zen, for talking to us and for taking
Thank
us
you,
through all
Karuna.
the developments that are going through, that are happening at Zim.
Yeah, thank you, Karuna. It was a pleasure. And hope to talk to you soon
I'll
again
just
sometime in the
stop the
future.
recording.
Yeah.
Give me a minute.
Yes.